Hello everyone, my name is Ibrahim Nawwaf as your presenter in this video. This video presented for International Conference on Business, Social Science, Economics and Technology 2021. In this video, I would like to present you a paper titled The Influence of Innovation Investment on Dividend Payment Moderated by Cash Holding and Internal Financing Deficit Among Listed Firms in Indonesia Stock Exchange 2010-2019, written by Ibrahim Nawwaf and Arif Wibisono Lubis from Faculty of Economics and Business, University of Indonesia. First, dividends are one of important reason for investor to buy company shares. Investor behavior can influence dividend policy, such as investor high dividend expectation behavior can influence firm dividend payment. On another side, innovation have a role in maintaining company's performance and being a key in long-term economic growth. The influence in innovation with research development led by investment traditionally have negative relationship with dividend because limited internal funds created by investment. But in earlier research and development as long-term investment have a new role to become an incentive strategy to raise equities. In China, this can happen because semi-mandatory dividend payment regulation as government strategies to raise investor protection. As stated before, research and development investment or expenditure is a long-term and inflexible activity. So, companies with higher research and development needs will inevitably face financial deficit internally, and some research suggests corporations gradually issue shares in order to build up cash reserves. So some company cash holding level increase when doing research and development as the focus. Besides, companies rely heavily on cash holding to facilitate the use of their research and development if financial shocks happens. And the role of an internal financial deficit to meet its financing needs are companies that have the potential of growth. If experiencing internal financing difficulties, they have to issue equity and trigger rising the dividend payment. In Indonesia, there is a significant change on investor attention for dividend. Former studies found dividend information doesn't get any reaction from investor, but more recent research has found that dividend have positive effect on firm value. And on 2018, Indonesian Stock Exchange announced IDX High Dividend 20, evidently raising investor attention for dividend given by companies. Yang et al. Research heavily based on implementation semi-mandatory dividend payment to strengthen investor protection, which Indonesia have higher investor protection if compared by China. Despite low level of innovation based on the Global Innovation Index ranking, which is 85 out of 131, research and development has a good influence on company dividend policy in Indonesia. The lack of similar research that has yet been done become the reason this study conducted. It is to examine the influence of research and development in Indonesia moderated by cash holding and internal financing deficits. It is expected that this research can provide a deeper understanding of how managers in Indonesia decide dividends. Our sample consisted by 424 from 43 non-financial companies in Indonesia Stock Exchange in 2010 to 2019 period. Data is accessed on official Indonesian Stock Exchange website and company's website, as well as Reuters, Thomson, and Bloomberg. To be included in our sample, firms were required to have accessible, complete, and clear data of all variables needed. Positive leverage and reporting research and development are equivalent in between 2010 to 2019. Our variables include dependent variables with dividend payout ratio, independent variable with research and development investment, moderating variables, we have cash holding and internal financing deficit. Lastly, we use control variables, which is from size, leverage, return on asset ROA, free cash flow, capital expenditures, and working capital. This research method using Tobit data panel as a regression model. Tobit model is a regression model with censored data. The censored type is used when data is skewed in one point. In this case, company doesn't always consistently paying dividend every year become the reason Tobit model is used. Data panel is used because our data combining time series data with cross-section data. For the model of regression use, the dependent variable is the dividend payout ratio of firm I in year T, calculated as dividend per share, dividend by earning per share. The primary explanation for variable research and development is research and development expenditures compared or divided by total assets. For moderating variables, cash holding is divided by net assets, and internal financing deficit is divided by total assets. And variables control is in control in the formula. Some public companies that do not pay dividends will be censored to zero. As stated before, this is why we use Tobit regression data panel models in our hypothesis testing. The result of Tobit data panel regressions is the independent variable to dependent variable, namely research and development investment on the dividend payout ratio, are significantly positive. As for the moderating value, when calculated directly on dividend, cash holding has insignificant positive impact and internal financing deficit has insignificant and negative impact. When cash holding moderates research and development investment, the impact becomes not significant and positive. Meanwhile, internal financing deficit moderated research and development investment have the same result with positively not significant. As for the control variables, the results are significantly positive for size and ROA. Other control variables, like working capitals, result is insignificant positive, while leverage, free cash flow, and capital expenditures are negatively not significant. This study found that research and development investment has positive effect on dividend payout ratio. The result is in line with Yang et al. And Nagasawa Ito. However, Nagasawa Ito have argued that this effect is highly dependent on the company's goals and country's corporate governance conditions. We can conclude this is consistent with other studies. Positive influence condition is carried out to provide incentive to investor and signal future company performance. While cash holding moderating research and development on dividend payout is not significant. The reason is that only total assets and ROA have positive significance. Brown and Peterson found the relationship between cash holding and research development smoothing in mature companies have insignificant relationship with a low coefficients. This condition is met in Indonesia because companies' most significant factor in paying dividend are companies' life cycles. In Yang et al., the significance of research and development moderated by cash holding is weakened in larger companies and supported these findings. The influence of research and development moderated by internal financing deficit in Indonesia has a weak and negative significance. We can conclude that companies try to reduce dividend payments when internally company finance are instead of deficits. The result is not similar to the research of Yang et al., which found that Chinese companies with high level of research of development and development with financial deficit internally with while seeking external funding and increase their dividend. The difference is due to significant difference in regulatory conditions in China compared to Indonesia. Indonesia has not been implement mandatory dividend as explained in Wardana Tendelin. The main reason is because companies distribute dividend to reduce agency problems that occur in minority shareholders. And the value is still very dependent on company cycle. As stated before, this is in line with our regression result of control variables. This means companies in Indonesia that distribute dividend tend to be companies with high maturity. According to the study, companies will have to rely on mechanisms other than reported earnings to deliver information to investors. Furthermore, if management believe a company prospects are favorable in the future, the payment of dividend is a reliable indicator of future performance. Dividend payment can become an incentive to raise research and development funds, and signaling that research will come through or will succeed in the future as time passes. For investors, they can expect dividend when companies report research and development expenditures. Overall, our results contribute to a fuller understanding of how research and development is related to dividend policies. This study have a limitation, with the sample of this study being limited on the companies which report research and development expenditures on their financial statement. This research they exclude from the conduct research and development activities, but merging if its report with other expenses or company's research and development become a part of intangible assets. As a result, there is research limited by low number of firms observed and the depth of analysis from the available data is low. Therefore, the future research is expected to cover the shortcoming by considering other companies who conduct research and development in different report criteria. This is the end of this presentation. Thank you for the opportunity, for the attention. Thank you for watching. Goodbye. Have a good day.